world you experience feels complex, confusing, disjointed. Yet beneath the noise, patterns exist. Banks, debt, and freedom of choice are pieces of a much larger structure. A global system quietly shapes politics, media, and the economy in ways few notice and even fewer question. In this episode, we will explore how money influences policy before it is even spent, why global debt is a tool of control, how international banking and politics intersect, why major decisions affecting daily life happen far from public view. This is not a conspiracy theory, it is structural observation. By the end of 2 hours, you will see the world differently. Episode 5: Money, Power, and the Global System. How influence shapes the world. You see, money is more than currency. It is a language, a code for power, influence, and control. When the U.S. Federal Reserve adjusts interest rates, or when the Bank of England announces policy changes, the effects ripple globally. Investors move trillions across markets. Currencies gain or lose value. Governments adjust spending priorities. Even people in Ghana, India, or Nigeria experience these decisions indirectly through inflation, exchange rates, and commodity prices. The lesson: money is not just what you hold. It is the invisible architecture of influence. Money as a global language. Money is universal, but power is local. Currency flows across borders, but influence flows through networks. Central banks, governments, international institutions. Few understand how decisions in London or Washington ripple to New York, Lagos, or Beijing. Central banks and political leverage. Central banks like the Federal Reserve, US, and Bank of England, UK, are not neutral. They control interest rates, influence inflation, decide who receives liquidity. These decisions determine who prospers and who struggles. Long before anyone votes, invests, or spends, money is more than currency. It is a language, a code for power, influence, and control. When the U.S. Federal Reserve adjusts interest rates, or when the Bank of England announces policy changes, the effects ripple globally. Investors move trillions across markets. Currencies gain or lose value. Governments adjust spending priorities. Even people in Ghana, India, or Nigeria experience these decisions indirectly through inflation, exchange rates, and commodity prices. The lesson: money is not just what you hold, it is the invisible architecture of influence. Central banks appear technical and neutral, but their power is deeply political. Interest rates affects mortgages, loans, and business investments. Quantitative easing injects money into the system, which can favor certain sectors or countries. Bank bailouts protects institutions deemed too big to fail, often at the expense of taxpayers. The Fed and the Bank of England shape your home loan rates, credit card interest, and government debt costs. These institutions influence not just economics, but political choices, because governments act within the constraints set by these policies. It's subtle, quiet, invisible. Most people never realize the extent of that influence. Debt as geopolitical leverage. Countries owe trillions. Debt is not just numbers, it is leverage. If country A lends to country B, it gains influence over policies, trade, and political alignment. Debt crises are often less about repayment and more about compliance with external agendas. Debt is not neutral, it is negotiation power, often international. Consider this: when the U.S. lends money to other countries, it creates leverage over trade agreements, policy alignment, and even military decisions. The UK has long used financial influence to secure favorable trade networks globally. Debt is not merely borrowing money, it is a contract for future compliance. When countries face debt crises, the world watches, but few see that these crises are designed to enforce rules quietly, without war or overt coercion. Corporate and financial networks, banks, multinational corporations, and government agencies interact through complex agreements. Contracts, derivatives, and hidden investments ensure that power consolidates even without anyone noticing. The global financial system is more like a network than a hierarchy. Major banks hold shares in multiple corporations. Multinationals rely on credit lines tied to central banks. Governments negotiate treaties influenced by financial dependencies. Even seemingly independent companies are often interlinked. Energy, pharmaceuticals, tech, and finance all cross-connect. A single regulatory or market shift in London or Washington can impact companies worldwide. Policy decisions in your country are rarely isolated. They are influenced by these global networks. Decisions about taxation, interest, infrastructure, and trade are shaped long before public debate begins. Policy decisions you experience daily, taxes, housing, healthcare, interest rates, are often outcomes of global negotiations and banking networks. If you live in the US or UK, this system touches your daily life more than you realize. Your mortgage rates reflect Fed or Bank of England decisions. Inflation on food and energy reflects global liquidity and debt flows. Political promises are constrained by international lending and banking agreements. The freedom to spend, earn, or invest exists, but within invisible boundaries dictated by a global financial system most people never study. Part 2. Political influence, media, and financial policy. The intersection of money and politics. Money and politics are often treated as separate in public discussion. In reality, they are deeply intertwined. Political campaigns rely on funding from banks, corporations, and special interests. Policy proposals are frequently influenced by lenders or financial institutions who hold leverage over governments. Legislative decisions on taxes, subsidies, or regulations are subtly shaped by global capital flows. When Congress or Parliament debates budgetary priorities, the choices are rarely purely ideological. They are constrained by the financial realities and debt obligations established by both domestic and international actors. In other words, money doesn't just fund politics, it channels it. Media as a shaper of perception. Media does not simply report reality, it frames it. Stories are selected, edited, and repeated to create consensus. Certain topics are emphasized, others are downplayed or ignored. Repetition normalizes assumptions and shapes public perception. Economic policies often appear inevitable because media coverage frames them as technical necessities rather than political choices. Global financial crises are often presented as unexpected disasters, ignoring long-term policy decisions or structural causes. Media isn't just information, it is guidance on what to perceive as normal, urgent, or important. Financial policy is invisible control. Financial policy is the mechanism linking Part 1 and Part 2. Interest rates influence consumer behavior. Quantitative easing injects liquidity that affects markets and asset prices. Taxation and government borrowing create incentives and constraints for corporations and citizens alike. In the US, the Federal Reserve may adjust rates to stabilize employment or inflation, but the ripple effects influence every mortgage, credit card, and savings account. In the UK, Bank of England policies affect housing affordability, pension returns, and national debt sustainability. These policies shape behavior long before anyone is aware, steering choices that feel free but are guided by systemic design. Global influence on domestic policy. Domestic politics is never fully domestic. Agreements between countries, trade negotiations, and global banking rules affect local governance. International bodies like the IMF, World Bank, and BIS often establish conditions for loans or support that limit national autonomy. Even when local leaders make decisions, the available options are framed by these external financial constraints. For example, infrastructure projects, healthcare funding, or social programs may be prioritized based on international debt requirements rather than local needs. Policy freedom exists within a corridor defined by global financial realities. The illusion of debate. Public political debates create the appearance of meaningful choice, but outcomes are often similar. Two parties may propose different solutions, but both maintain the same underlying structures. Structural decisions on banking, taxation, and trade remain largely untouched. The goal is engagement, not disruption. The system allows disagreement within boundaries that never threaten its core. I know by now, you must be asking yourselves these questions. Who really frames the policy options available in my country? How do global financial networks indirectly decide local laws and social programs? Why do political debates often feel repetitive, predictable, or disconnected from reality. Let's see about that in the next section. Part 3. Identity, culture, and self-perpetuating systems. How structure becomes personal. By now the framework is clear. Money flows globally. Politics is subtly influenced. Media frames perception. But systems are most stable when people internalize their rules. What does this look like? Citizens defend policies that limit their own choices. Individuals rationalize inequality as normal or deserved. Collective habits like spending, voting, or consuming support the system without conscious awareness. Your career, education, lifestyle, and even entertainment choices are shaped by structural pressures far before you consciously act. Part 4. Global manipulation, propaganda, and financial survival. The quiet force of propaganda. Modern propaganda is rarely overt. It is subtle, pervasive, and often unrecognized. Policy messaging shapes perception before decisions are made. Media cycles repeat narratives that influence public opinion subtly. Social media algorithms amplify certain stories while suppressing others. Economic crises are framed as technical necessities rather than policy outcomes. Political messaging is tailored to encourage participation within predefined boundaries. Public consensus is manufactured through repetition, emotion, and selective emphasis. The average person believes they are reacting freely. In reality, reactions are guided by carefully managed information flows. Financial survival as a systemic trap. Global financial systems are built to reward compliance and penalize deviation. Credit dependency ensures individuals follow predictable paths. Loans, mortgages, and interest rates shape life choices decades in advance. Government subsidies, taxation, and policy incentives encourage participation in ways that benefit systemic stability. Even when people attempt alternative strategies, the system adapts. Interest rate changes penalize riskier investments. Market fluctuations disproportionately affect those with less capital. Economic narratives justify the outcomes and maintain perception of fairness. International financial intervention. Countries are also subject to subtle external influence. International institutions like the IMF or World Bank provide loans with conditions attached, affecting domestic policy. Bilateral lending arrangements create dependency networks. Global trade agreements often dictate economic priorities, leaving local governments with limited flexibility. Even when your government appears sovereign, global networks influence decisions on trade, regulation, and debt management. Policy freedom is often constrained by unseen international obligations. Media amplification of financial decisions. Media plays a critical role in stabilizing these systems. Crises are framed as emergencies requiring immediate, narrow solutions. Success stories of elite financial actors are celebrated while systemic flaws are obscured. Public attention is directed toward personalities and events rather than structural analysis. This ensures engagement without challenging the system itself. How culture and psychology interact with global systems. Social pressure, identity, and cultural reinforcement shape compliance. Media, entertainment, and education normalize systemic structures. Awareness alone rarely leads to systemic change. Patterns are repeated generation to generation. Result, self-policing populations that defend the very systems limiting their choices. Resistance, adaptation, and navigating the system. Understanding the limits of control. The first step to resistance is clarity. Recognize that systems are designed for compliance, not malice. Understand how global money, policy, and media shape choices. Observe patterns before acting. Impulsive rebellion often leads to failure. Everyday decisions, from where you invest to what you consume, are influenced by structures that reward predictability. Awareness of these patterns is the foundation for meaningful adaptation. Individual strategies for navigation. Even within constrained systems, some strategies allow greater agency. Diversification of income and resources. Multiple income streams reduce dependency on single financial structures. Knowledge of global markets allows better timing and decision-making. Consume media critically, recognizing framing and omissions. Compare domestic narratives with international perspectives to uncover biases. Debt management as power. Understand the terms and structures of loans. Use debt strategically, not as a trap. Cultural and social awareness. Identify norms that reinforce compliance. Build networks that encourage questioning and resilience. Collective strategies. Systems are easier to navigate when people act collectively. Community initiatives, co-ops, and decentralized networks reduce exposure to centralized control. Shared knowledge about financial literacy, policy, and global influence empowers groups. Historical examples show that coordinated adaptation can shift systemic pressure without overt conflict. Global examples of adaptation. Financial innovation. Alternative banking, blockchain, and decentralized finance, DeFi, provide new routes for capital outside traditional networks. Policy influence movements. Grassroots lobbying and informed civic participation in the US and UK have shaped economic and social policies, even within constrained systems. Media literacy campaigns. Public initiatives to improve critical thinking reduce susceptibility to repeated narrative. Over the past minutes, we've explored how money flows globally and shapes local economies, how political systems are influenced by finance and media, how culture and identity make people self-policing participants in the system, how propaganda, narratives, and repetitions stabilize global influence, how resistance and adaptation are possible but carefully calibrated. The pattern is clear. The system is deeply interconnected, but not invincible. Understanding it is not just knowledge, it is power. Why the system persists? It rewards compliance and punishes deviations subtly. It internalizes control through culture, media, and identity. It allows participation to appear voluntary while guiding outcomes. Your economy, your political choices, and your media consumption are all subtly influenced by this architecture. Most people never see the invisible currents shaping their lives, which is why the system persists, quietly, effectively, and often unnoticed. The duality of freedom. True freedom is rare, but not impossible. It requires awareness, patience, and strategy. It requires understanding the rules of the system before attempting to step outside it. Incremental adaptation, both individually and collectively, can shift personal and societal trajectories. The key, freedom exists in understanding the invisible forces and acting deliberately within. Awareness is empowerment. Understanding global flows, debt leverage, and media framing reveals the hidden system. Participation can be strategic. Engage selectively to gain insight or leverage, not just habit. Collective intelligence matters. Knowledge shared in communities amplifies agency. Agency is a skill. Freedom is earned incrementally through awareness, risk management, and informed choice.